Welcome back, fellow value investors. This past week was another winning week. We're on 6 weeks of an upward market. It's a great market to be a stockholder, to see our stocks go up. But is it getting too late in this rally? It's certainly beginning to feel that way. I'd like to share with you what I'm seeing and what I'm expecting over the next couple of weeks and where I expect the market's going to go and the opportunities that I hope to take advantage of. I'll go through and share that with you. Before I jump into the analysis, do me a favor and like my video, subscribe to my channel, and please leave comments. I'd love to hear what you think the market's going to do next week and for the month of December. Let's get into it. So first, the stock market ended the week on a positive note. Every index went up. The S&P went up, the NASDAQ, the Russell, and the VIX went down, meaning the VIX is the volatility index. When the VIX goes down, that means that stock investors feel comfortable and they want to buy stocks. One thing I'll point out is one thing I've seen is that small and mid cap stocks are outperforming the S&P and the NASDAQ overall. Over the last month, small and mid cap stocks represented in the Russell 2000 had a return of 10.3% of price appreciation, while the S&P and the NASDAQ were down in around 4.4%. So all exchanges have been doing well over the last 6 weeks, but I see that small and mid cap stocks are going to perform well, I would say, for the next 6 months. And the reason for it is that they did not participate fully in the 2023 performance that the S&P had. And part of it is that the S&P has these mega caps, these huge cap companies that make up 31% of the index on the S&P, and just 7 stocks make up 31%, the Magnificent Seven stocks. And that has a big effect on that index value. Now, those stocks, I believe the law of big numbers, it always wins. There's just no way Apple's going to keep going up in my book. It's too expensive as a company. It's a $3 trillion valuation and the company's not really growing. So how do you justify buying Apple at that valuation? I can't justify it and I'm not a stockholder. But I think on small stocks, small cap stocks, they're growing. They have 10, 20% growth rate. Their free cash flow is growing. They're profitable. They have uniquenesses, advantages, and compelling propositions for the marketplace. And that's where I continue to add shares. Now, it's been difficult for the last 6 weeks because I like to buy shares on down days and big pullbacks. When there's big pullbacks, I know it's harder to buy when the market just hates stocks and the market keeps going down day after day. It's actually the best time to buy so that I can make the most amount of money over the long term. So that's what I've been seeing, is that the small mid cap stocks have been working, and I'm going to continue to really analyze companies and find those diamonds in the rough in small and mid cap stocks, as well as large cap stocks. But I've been doing a lot of homework this weekend. I went through probably about 10 companies, and I'm going to be buying into Public Storage, which is a mid cap stock. It's a real estate investment trust, and real estate's been really doing well. I've also put, and it's a mega cap, but I'm putting Qualcomm on my buy list. And the reason for it is I think their valuation does provide a good discount, and semiconductor has certainly worked this year. And Qualcomm is not, I don't think, overhyped due to the AI overhype, and they pay a nice dividend. So there's still opportunities. Every market will give you opportunities to buy companies at a discount. And I'm a long-term investor. I make money year after year. And that's my goal, is to make consistent, high returns year after year. And this year, 2023, has been an excellent year. Last year was a good year, year before that as well. So that's what I'm seeing on the index. Now let's talk about sectors. So looking at sectors, it's interesting to see over the last month which sectors perform the best. The best has been real estate. And this is right up a value investor's alley, which is real estate. If you look at, historical returns, it could never match like technology, even healthcare. But it was so beaten up because there was a lot of fear about these higher interest rates are going to make real estate just a really undesirable asset. And there was some truth to that, but it was so overdone that now the interest rates have begun to fall. This space has really picked up. So there's some really good discounts and value in this space, which is why I'm buying into Public Storage. I've been buying into VC. I did a different video and you can find it on my channel on the real estate investments that I'm making. And principally, it's on that value investor, philosophy that, hey, I'll buy when everybody hates it and then watch my investment rise over time if you're giving me a good value proposition. So real estate, really looked good. Industrials are really picking up, and that makes sense. And that is consistent with the expectations on the economy. What we saw this week is that there was a lot of jobs created. We had a report where jobs were created. Inflation is under control. The Federal Reserve is controlling inflation. And now the talk is that we may not have a recession. We may have a very light recession or no recession, which is good for industrials. It's also very good for financials, which did really well over the last month. And as I've covered in a different video, financials were really beaten up in 2023. There was a lot of fear in banks. The interest rate volatility created a lot of, if anything, wait and see attitudes where people were unsure how it's going to affect them. So they sold off on financials, and I bought into financials, and I'm really glad because that's probably my best performing sector has been financials over the last 30 days. Consumer discretionary is really doing well. That was a little bit of a surprise. I've been hearing of this recession that's never come over the last 2 years, and it's done really well. There's some really interesting companies. Technology is just been doing great. I'm glad I have technology in my portfolio. I'm glad I invest in them. It's probably my biggest category. And I also sold some technology companies in 2023. I sold Broadcom. I sold Adobe. And the reason for it is, I made lots of money on them. Great. But I think those prices are just too high at this time. But it'll continue to be a high sector in my portfolios. And then the last one I'll cover is materials. So materials are mining companies, chemical companies. And again, as we see that, hey, we're beginning not to expect a recession. The economy is going to start to grow. We're going to need more materials to keep these factories rolling, to make products that the economy is going to need. So it's interesting to see the sectors that perform the best. Now let's go over the ones that perform the worst. So energy, oil prices have gone down consistently over the last 2 months, which is good for the consumer because that means when they fill up their gasoline tanks, the prices will be lower. It's also good for airlines where when they fuel up their jets, price will be lower. So that's good for the economy. But it's not good for Chevron Exxon. I own Chevron, and the price of Chevron has gone down. And I just got paid a big dividend today. So I'm good keeping Chevron. It's been one of my holdings for a long time. That was the worst performing sector of the month. Now that can quickly change if oil starts to rally. If we get into rally mode in oil and it goes up, 10, 20, 30% per barrel on price, you see energy companies really rally and they start making lots of money. At this point, they're still profitable, and I'm going to keep my Chevron shares. The other two that I'll comment is healthcare and consumer staples. And I've kind of deemed these to be, I'm going to be careful not to buy too much into these. Historically, what I would say 2023, there's always a lesson. I'm always learning. And 2023 did teach me a lesson on healthcare. I was probably had too many shares on companies of healthcare, and it really held me back in 2023. So I'm going to be more careful and more disciplined when it comes to healthcare. I think pharmaceutical companies are a great investment, but they just did not perform really well. And I believe healthcare is stable, which is true. But as the comments I made on the economy never went really bad. So healthcare didn't rise when everybody else was falling in the year of 2023. And it's a lesson that I learned. So I'm willing to take my lumps and say, yep, my healthcare stocks actually lost. More of my healthcare stocks lost value versus the ones that gained. And we'll see how they do in 2024. So my notable winners that I wanted to comment on this week, the first one is Coinbase. This one is just doing great. It's my number one percentage performer for 2023. It's just unstoppable. A lot of things have gone their way. FTX went down. So that means the customers that FTX had, many of them went to Coinbase. You had Binance have their issues, and I think they lost a lot of customers. And who's left? Coinbase. So a lot of customers went to Coinbase. The cryptocurrencies have been rallying. You have Bitcoin is up 150% in 2023. You have Ethereum, the second biggest coin, is up upwards of 80, 90%. So those things are really just creating an environment where Coinbase is just flourishing. And I'm a long-term holder of Coinbase. It took a lot of internal fortitude to keep the stock because in 2022 it was sold off like it was just going to go bankrupt, and now it's just doing great. My only regret is I didn't buy enough. I'm sure that you feel the same way when you have a big winner. Is why didn't I buy enough? But it's good to be in a position that's doing this well. The second stock I'll talk about is DocuSign. This is with the theme that I've been talking about, that small and mid-cap stocks are doing really well. If you look at DocuSign, it's a software company. It's a intellectual license business where you buy it as a subscription. You can have people digitally sign documents. It has a strong proposition. It's number one. It's the consumer favorite. And it's profitable and it's growing. It's growing at 10%. It keeps increasing its free cash flows. All those things, a company should be flourishing, yet DocuSign has sold off over the last 18 months. And that's the recipe for me to be a buyer, frankly. I think DocuSign's a good long-term hold, and it's an acquisition target. It would be very easy for one of the bigger software companies to buy this company, and that bigger software company would benefit from immediate increased revenues that are profitable, that generate free cash flows. The company's doing well over the last month. It's up 21%, announced their earnings this past week, and the stock really went up. So investors really liked what they saw in the earnings. The last one is Uber, and I just love this company, and I love the company's service. I'm a big Uber customer, as I'm sure many of you are. And I think they're the number one player in, mobility. They're becoming, a big player in food delivery. I think their platform is huge and it's really valuable, and they're growing internationally. And overall, I thought the price of the stock was incredibly low. 12 months ago, I bought a big position in Uber. It's one of my big dollar gains of 2023. Year to date, it's up almost 150%. And it had a nice week last week, going up 7.5%. So those are three of my winners that have been going on. Again, I want to just say that, as we look at, where stock prices are going to go, it's really fun to see many of my stocks go up, especially over the last month, and participate in the rally we've had over these last 6 weeks. But the market doesn't give us a smooth, graph. I'm expecting that these days have been a lot of fun, but there's probably gonna be some pullbacks coming up. This coming week that begins on December 11th, we have a lot of news coming up. To begin with, the inflation report is going to come out on Tuesday. We're expecting that it shows that inflation continues to be on the downward trend. And if it does, I don't know that the market's going to go up or down much. But obviously, if inflation, the report shows that inflation had increased, then stocks are going to go down. I think there'll be more concerns around interest rates. If we get a very favorable report showing that inflation is actually dropping faster than expected, the stocks may rally. Following the reports on Wednesday, the Federal Reserve will meet, and the governors, along with the chairman, and they'll comment on where interest rates are headed and make a decision whether they want to increase or decrease interest rates. And I'm not expecting a change in interest rates, but based on what the chairman says, that could drive the market. I'm expecting that he continues to be tough on inflation and say that, hey, we're not confident that we've done enough. We may have to do more. He'll probably say things like that. And I'm not sure if that's going to drive the market down. It could, but I think he's been saying it long enough where investors are somewhat familiar with that tone and somewhat comfortable with that tone. It shouldn't affect them too much. And then we're going to get the jobless claims report, and that comes out after the Fed Reserve, and that could drive the market. Again, we had a favorable jobs report this past week, and this one here, if it's consistent with last week, it'll continue to make the market, it'll continue to make me feel like we're not going to have a recession, or if we have one, it's going to be really light. So that may change people's expectations on 2024. So the jobless claims, along with, where inflation's at, is kind of setting up what's going to happen in 2024. So I wanted to weigh in and give you my best guess on what's going to happen this week with stock prices, what's going to happen with stock prices for the remainder of December, and what I expect in 2024. And the reason that I like to go there is, based on what happens, I want to have a plan. If stocks go down, I have a list of stocks that I want to buy. If stocks go up incredibly high, I have some stocks that I may sell because their prices are too high. And based on the value that I have for those companies, I'm willing to take that money off the table and recognize it. So for this week, I'm expecting that stocks are going to fall. We've had 6 consecutive weeks of stocks going up. And it's a situation where, as I look at stocks, and I looked at about 10 different companies that I own, 2 of them I don't own, and I look at how their stock prices have performed over the last 30 days, they're just doing really well. They're up 20, 40%, and it's that's not sustainable. There should be a pullback, I expect, just because the stock market doesn't give us smooth charts. It's usually over time, you may be going up, but it's a little bit of a give and take where the market has a couple of up weeks, 1 or 2 down weeks, up weeks, and so forth. So I'm expecting a down week. If I had to bet a dollar on whether it's going to go up or down, I'm expecting it's going to go down. For the month of December, I still think that we're going to have a positive December. We have 3 weeks of investing left in 2023. I think some investors have been on the sidelines and would like to get back in. I think they really left a lot of money on the table by not being in stocks in 2023. So I think their entry into the market may drive the markets higher. But again, I think we're going to have a pullback week this coming week or the following. But overall, December should be good. In the year of 2024, it's important to pick the right sectors and find the value in the market that we're going to have in 2024. The Magnificent Seven stocks are really interesting. They're great companies. The mega caps, they got to a mega cap status because they're great companies, but many of them are overpriced, and they're overpriced significantly. I analyzed Tesla. That was one of the 10 that I analyzed. And I just cannot see how they're worth above $700 billion. My valuation is a third of that. And I might be wrong on that one, but Tesla would be one of the most popular stocks for retail investors. It's an easy company to get your head around. Just about everybody drives a car. I think the Tesla electric vehicles are the best. I think they're great cars. I think the company's great. I just don't think the company's worth over $700 billion. I think they're worth more like a third of that, which is still a mega cap. So that's an example of where I think that in 2024, I expect Tesla's going to go down. And because the other car companies are producing EVs that are going to be a very good value to consumers, and they're going to have a lot more competition. It's going to be very hard for them to grow, and prices are falling on EVs. But there are spots in 2024 you can make lots of money. Sectors like I showed, real estate really sold off. Financials really sold off. I think they're going to do well in 2024. And it's a matter of finding which sectors, which industries were really sold off and discounted, and then finding the companies that have been sold off that are just incredible values and come in and buy those shares so that you can have a portfolio that really performs in 2024. That's certainly what I'm doing. I'm trying to find those companies, those stocks that have been left behind. And stock market in the short term is a voting machine. It's a popularity contest. But over the long term, it's a value. It's a weighing machine where the market will weigh the value of those companies based on free cash flows, earnings per share, and things of that type, those metrics that we can look at as a fundamental value of those companies. So I think for 2024, it's really an art and science combined of finding the companies within the sectors that are really going to work for 2024. And that's what I'm going to be working on, preparing my portfolio to take advantage of those opportunities. So that's my recap of stock investing for this past week. I hope you found it interesting. I'd love to hear your comments. I'd love to hear whether you think the market is going to continue to go up this coming week, what you think the market's going to do for 2024, and so forth. Love to hear your comments there. Please do me a favor and like my video and subscribe to my channel. I'd really appreciate that. Thanks again for watching, and good luck investing for the remainder of 2023.